Good morning, everyone, and welcome to Alsea's second quarter 2023 earnings video conference. Today, our Chief Financial Officer, Armando Torrado, and our Chief Executive Officer, Rafael Contreras, will be presenting the quarter results. Now, I would like to hand it over to Armando for his initial remarks. Please, Armando, go ahead.
Thank you, Nico. Good morning, everyone, and thank you for joining our second quarter 2023 earnings video conference. I'm very excited today to share our results, regional and brand performance, and some insights on our ESG achievements. In the second quarter, we experienced a constantly and strong sales across all the company brands. This is a result of our strategic long-term plan to continue to generate value for our shareholders. We are pleased to announce a 12% year-over-year increase in total sales, amounting to 18.9 billion pesos post IFRS 16, and a 19.9% increase excluding the impact of a stronger peso. Despite a sequential increase in the comparable base, same-store sales showed an impressive growth of 18.6% year-over-year. EBITDA pre-IFRS increased by 15%, amounting to 2.5 billion pesos for the quarter, with a margin of 13.7%. Post-IFRS EBITDA increased by 6% to 3.6 billion pesos for the quarter, with a margin of 20.3%. This quarter's results and reflects a strong demand for our brands and the company's high profitability, driven by positive consumer behavior and supported by our strong business model. We serve over 12.3 million orders by home delivery this quarter, reaching 3.2 billion pesos, representing a 12.8% increase compared to the second quarter of 2022. Home delivery sales accounted now for 17.1% of our total sales. Regarding our brands, Starbucks reported an impressive year-over-year same-store sales growth in Mexico of 25.2%, while in Europe, 15.3%, and in South America, 42.8%. Excluding Argentina, the percentage was 11.8%. Regarding Domino's Pizza, sales were up in Spain and Mexico 7.8% and 5.2% respectively. We are pleased to announce that we were well recognized in our two biggest markets, Mexico and Spain, with a Gold Franny Award, the most prestigious honor bestowed on Domino's franchisee owner. The award is based on several key factors, including operational audit scores, community involvement, store safety, and security. Domino's International, as you know, entered into an agreement with Uber Eats in England to enhance our delivery service, especially in Mexico and Spain, while gaining deeper insights into our customers. In Mexico, our successful commercial strategy to increase participation at the carry-out segment resulted in a remarkable 19% sales increase compared to the year before in this prestigious channel. Regarding Burger King, we reported another positive increase in Mexico and Spain of 9.5% and 3.1% respectively. During this period in Mexico, it is important to say that our digital kiosk implementation is being very successful, with a 17% increase in average ticket. We will be implementing this channel of a digital kiosk in all our brands, in all our stores in the next quarters. Regarding Vips, Mexico continued with strong second quarter same-store sales up to 7.5% year-over-year. Orders were up 8.1%. Vips remain to be focused on improving in-store overall experience. Also in Spain, we reported a strong second quarter sales increase of 12.8% versus last year. In Mexico, we continue with our revitalization efforts to the brand with an additional of 10 remodeled restaurants year to date, with a target up to 40% by the year and which resulted in sale improvements around 15%. The brand recently launched its communication platform Igual que en Casa, with the aim to prove guests with a unique experience in a home environment, offering familiar, close, warm, and personalized attention, taking care of every detail, creating great moments in each visit. Likewise, the brand resumed its presence on television, which has brought an increase in sales in the week 29. Our global casual dining segment also had a solid quarter, with a same-store sales up 10.2% and orders growing 5.6% versus the second quarter of 2022. Continue with our expansion strategy. I am delighted to announce a significant milestone: the opening of the first Starbucks store in Paraguay, making the brand's debut in the country. As we move forward, we will carefully evaluate each new potential location to ensure the profitability of our establishments. In line with our digital transformation strategy, our digital sales, which include e-commerce, aggregators, and loyalty, grew 21.4% versus last year, reaching 4.7 billion pesos at the end of the second quarter 2023. This represents a 28% share of the total sales. Domino's achieved with a remarkable 40.2% penetration of digital sales, and Starbucks witnessed a remarkable growth of 48.1% compared to the last year. Starbucks Rewards program, Stars for Everyone, we did a soft launching in Spain and Portugal in this quarter. More than 170,000 new members joined the program since we launched it. Spain, France, and Portugal have a tender of 12%, 11%, and 10% respectively. In Mexico, the Starbucks Rewards tender was 28%. We expect to grow the tender in Europe in the coming quarters. Regarding ESG, finally, I would like to give you a quick overview of what has been going on in the company. In Europe, we highlighted Domino's Pizza effort in Spain to transition from regular delivery fleet to electric vehicles, having already modified 13% of our fleet, with a goal of reaching 30% by 2026. Additionally, the installation of solar panels in three out of our 4 factories that we have in Spain, and also in other 4 freestanding stores, resulting in a 20.27% reduction of CO2 emissions for the factories. In Mexico, Alsea and its brands, through the Va por mi cuenta movement, led the Fundación Alsea, delivering 5 vehicles, 2 with a capacity of 5 tons and 3 with 1.5 tons, benefit 5 food banks of BAMX network, increasing the association capacity to combat hunger among vulnerable populations. In Mexico also, we have 1,188 units powered by a clean and renewable energy, consuming 81 GWh, which represents 69% of our consumption in the country, thereby reducing the impact of scope 2 emissions. Also, during this quarter, we certified 23 Starbucks Green stores, bringing the global total to 42, embracing the Starbucks Greener Store framework. The equipment in these greener stores increase efficiency, leading to a reduction in water consumption by 15%, energy consumption by 28%, and carbon emission by 4% compared to normal regular stores. So I would like to thanks to all our team for a strong number in the first quarter. I'm pleased to report that we are running ahead of our guidance so far. We will see how the rest of the years unfold, but based on the current information, I am upbeat about the outlook going forward. The consumption in Mexico is strong. The summer season in Europe is looking promising. Cost pressures have been eased in most of our regions. Operating leverage is being benefited on us, and our team has been executing exceptionally well our commercial strategies. Now I will pass the voice to Rafael so he can give you a more detailed overview of our brands, regions, results, and balance sheet items. Thank you very much.
Thank you, Armando. Good morning, everyone. We were pleased with the performance per IFRS 16 numbers also. Quarterly sales increased 10.9% on a per IFRS 16 basis year over year. Costs were up 45 basis points versus last year, and adjusted EBITDA was up 15% to 2.5 billion pesos. Looking to regions, in Mexico, sales were up 17.6% to 9.8 billion pesos, and adjusted EBITDA was up 23.1% to 2.3 billion pesos. This improvement was driven by digital innovations, new menu offering, and the continuous improvement in the retention of key talent, decreasing 2.9 percentage points in the turnover rate of the country compared to the same period of the last year. Also, sales growth helped us to improve our operating leverage, and the cost was benefited from the appreciation of the Mexican peso, resulting in a cost reduction of 100 basis points. In Europe, sales were up 4.4% to 6.6 billion pesos, and adjusted EBITDA was down 5.1% per IFRS 16 to 866 million pesos. However, when excluding the effect of foreign exchange fluctuations, sales grew up by 15.7%. The increase in sales was driven by the normalization of consumption in the region, digital strategies implemented, and the product innovation. The contraction in the EBITDA was mainly due to the impact of the raw material and energy costs year over year, as well as the rise in minimum wage, partially offset by responsibly price increases, cost control, and value strategies. South America posted a strong 49% increase in same-store sales for the quarter, with adjusted IFRS 16 EBITDA increasing 13.2% to 526 million pesos. The results in this region are mainly related to the inflationary impact in Argentina, as well as responsible pricing strategies and product innovation. Our net income per IFRS 16 for the second quarter increased 89.7% to 475 million pesos year over year. This result comes from a very strong EBITDA generation and a benefit of the exchange rate variation. In the second quarter of the year, we achieved a pre-IFRS 16 earnings per share of 2.74 pesos, and including IFRS 16, earnings per share rose to 2 pesos and 37 cents. In terms of our investments, the total capex for the second quarter amounted at 1.7 billion pesos. We allocated 39% of this amount to maintenance, 45% to store openings and remodeling, and 16% for the strategic projects. In the quarter, we paid 44 million pesos of our net amortizations. Our pre-IFRS gross debt increased 3.1 billion pesos year over year, closing at 25.5 billion pesos at the end of the quarter. This reduction in debt corresponds mainly to the devaluation of the euro against the Mexican peso and the debt amortizations during the period. Our pre-IFRS 16 gross debt to EBITDA ratio at the end of the quarter was 2.7 times versus a covenant of 4.9 times, and EBITDA to interest paid at 3.2 times. Net debt to EBITDA 2.2 times, with a cash position of 4.3 billion pesos. The debt structure at the end of the quarter was 63% on fixed rate and 37% variable. Also, 87% long-term, with 64% in Mexican pesos and 36% in euros. And we reached a return on equity of 25%. We can go to a Q&A, please.
We will now start the Q&A session. If you have a question, please press the question button in the browser. The first question is from Mr. Sergio Matsumoto from Citigroup. Please go ahead.
Yes, hi, good morning. Thank you for taking my question. Armando and Rafa, could you comment more on the employee retention plan that you implemented, announced in Alsea Day this year? It looks like you're gaining quite a bit of traction with it, with frontline employees. You mentioned recruiting and training are better. If you could give us more color on that. And is there more that we can expect from this program, perhaps on technology and automation, if that's part of that? And also, if you can comment on the store managers' compensation, that may help improve productivity.
Oye, Sergio, thank you. How are you, Sergio? Good. Yeah, I mean, what we are doing, I briefly hear you, but you talk about the retention plans that we are doing, right? What are we doing regarding retention plans? And I've been very, very focused on that. Actually, we have very pleasing and record numbers in Mexico regarding turnovers. We're working hard in Spain to do so. But then we did some major things, very focusing the people from 0 to 90 days. The people that are here most and surpass the 90 days target, they stay longer. So we're working very hard in retain all those people in a program. Of course, we did some adjustments, salary adjustments. That is also with the ESG program in 2 of our brands regarding salaries. We are focusing in critical zones, critical regions. Especially in Mexico, we have 4 states where labor is starting to it's being complicated, regions that the labor is growing fastly, and it's complicated to get those hands. So we are focusing there. We are also having a really good, robust selection plan, also working with AI, I will tell you. We've been having that platform of hiring with AI since last year. It's working very good for us because in Mexico, we hire more than 2,000 people a month. So that is working fine. And also, why not? I mean, develop an process of promotions with internal upside in our people. And then the other one, as you know, Alsea has a gerente dueño program and a digital coach program that has been working since 2 or 3 years. So that's also giving us a good response of having the best managers and the best staff in our stores.
Thanks, Armando. Just to, if I may clarify, those 4 states that with more shortage, is that safe to assume they're up north in Mexico?
Yeah, it's Nuevo León for sure. It's Querétaro. We have in Quintana Roo, those 3 states, and we're seeing some problems also in Bajío, in the Bajío zone. And all is the north shoring. Of course, we are looking. There's shortage of people especially in Nuevo León. That is a little bit the biggest one that we are suffering.
Thanks for that color, Armando.
Thank you.
Thank you very much for your question. Our next question is from Ms. Camila Acevedo from UBS. Please go ahead.
Hi, gentlemen. Thank you for the space for questions and congratulations on the results. I have 2 from my side. The first for Armando. So could you comment about the commercial initiatives implemented at Vips Mexico and which were the impacts on traffic? And the second for Rafa. So considering the strength of the Mexican peso and your debt denominated in Europe, is there any chance you can take advantage of this, swapping or hedging the debt, perhaps? Thank you.
I mean, I will let Rafa start too.
Well, in terms of the credit that we have in euros, we don't have a hedge because we have a natural hedge with the euros that we have in Europe, and in Mexico we did the hedge, when we issue the US bond. So really with the FX that we have right now, we can't do, say, anything to have a better rate in terms of the cost of debt.
And regarding the strategy in BIP, since we started in the last December, we were losing traffic in that specific brand versus 2019. You know, mobility was a big concern, and that family restaurant segment is really moved by mobility. You know, so what we did in January, February, March is actually do a very aggressive strategy in I would say in price, but also involved innovation process. No, we look at what was working, what was the product that was originally for us. We look at the receipts. We focus in the quality of what we were selling, giving a attractive menu during the weekdays. So we did that from January to March with a long, well executed strategy that gave us traffic and momentum. And right now we went again with Los Clásicos and another promotion that is just working well. As I told you, that the brand was back in national TV. We've been having 2 or 3 record weeks. The last week, the best week they ever had in BIPs. So we are very pleased with that. Margins are strong, going back to 2019, and there's a lot of things well and good momentum to come in that brand regarding, especially in innovation. That's what we want to make, like a transformation there. We are pleased that we're gonna remodel 40 stores. This is 40 restaurants. That's a big milestone for us. We are already up to 12 more or less year to date, and we've seen an increase of sales when we do the remodelations of 15%. So that's a little bit our comment in why the results are strong in this brand.
Thank you both. Very clear.
Thank you very much for your question. Our next question is from Mr. Antonio Hernandez from Barclays. Please go ahead.
Hi, good morning, Rafa, Armando, Nicolas. Thanks for taking my question. Regarding Europe, I don't know if you could provide more light on your expectations there, and also how. I mean, you mentioned a strong summer season, but now, I mean, for the last part of the year, your expectations are both in terms of sales and profitability, and how much is a warm weather in that zone, in that region, also impacting both sales and margins because of energy? Thanks.
Oh yeah, Antonio, as I mentioned, yes, it's been strong. The first 4 weeks of July, we are up 12%. So way above the second quarter that this Europe unit report. So it's been a great steady, especially in the tourism places. We also, in the tourism places, Starbucks, and we have restaurants, we've seen a good momentum and increase. I mean, we have still a way more to go because, you know, August there is stronger. So we are looking. There is regarding the heat waves that are incoming for our business, the cold beverage moved, and that is a strong profitability product. Now we moved just in Mexico for 42 to 46% in those 2 weeks. So that gave us a good momentum. We'll have the same impact then in Europe. As you know, and I mentioned, with some third parties, we did an analysis on a strategic price and strategic analytics. So we are right now in place, especially in Europe, in some of the summer places of vacation, having a differentiation in price that is giving us a better result in margins. And then regarding energy, as you know, with the worst quarter that we report energy effects was the third quarter of last year in Europe. Things are way down in the price of electricity that we are paying. So the result from Europe, third quarter of this year regarding that one, it will be a lot stronger. And we are seeing a good momentum raising prices in the products that really are affecting us, like coffee, like cheese, like wheat, and harina. So that is a little bit what is happening. No, there's a good momentum in all the geography and with all the brands. No, so I'm happy to announce that things look better than we thought and expected, and especially better than the second quarter or the first quarter in Europe.
Perfect. Thanks for the call, and have a nice day.
Thank you very much for your question. Our next question is from Mr. Joaquin Ley from Itaú. Please go ahead.
Hi, Armando. Rafa, good morning. How are you? Two questions, if I may. The first one, now that you've sold El Portón, and are you comfortable with the portfolio of brands that you have, or should we expect further rationalization, right? And along that question, what have you learned from the acquisition of El Portón regarding potential future M&A? Okay. And the second question goes to Europe energy. So could you elaborate a bit more on the sequential behavior of energy prices that you're seeing for your operation in Europe? And are you thinking again about potentially hedging at the prices that you'll see for the second half for 2024?
You want to comment a little bit, Rafa, on energy? A little bit.
Well, yeah, in terms of energy, the cost of energy in the first quarter was in average 97 euros per megawatt. And in this second quarter, it was 95 euros per megawatt. What we are expecting is that the cost goes down for the second semester. The special guys told us that it can be better next year, and we can expect around 60 euros per megawatt. And I think, or we think, that can be a good cost to have a hedge or a long-term contract with somebody.
Okay.
Also, just to mention that, Joaquin, and just going to your first and your second question, there is a big impact there. Renewable energies in Europe are really coming back. No, there's some big projects of renewable energy, and we are seeing to have the whole amount to go to close a deal with some other guys. We're already talking to that. Well, so I think we're gonna stand by now to see what is the future and not signing anything. Thank you for your question. That was a very good one. I mean, regarding first of all the portfolio, no, I think we still have some other units that you can see that we've been not growing those units and those brands and some regions. We're gonna try to exit that, and we've been trying already since the last probably 1 year that I saw you and that I took position. No, I was very clear that we're gonna focus in the brand that makes us really remarkable, difference, but still our casual business division of the whole is being very profitable. It's growing in traffic, it's growing in sales, and they are four-wall EBITDA above 20%. So they are doing well. Even though there's 2-3 brands there in our portfolio that are already in the process, and they are already in the market with some special people that to seek for a sale. No, so that is a fact. And regarding what are we learnings, no, that's a lot of learnings. No, if we don't have critical mass, we have to decide where to play the game. No, and the Portón, it's a great brand. It was a great product for us, but since the beginning, and when we bought 10 years ago from Walmart, that was a second brand of the portfolio. That Vips was the first one always. And if you go, we have a lot of combos where sales of those combos, Vips did 100,000 and the other one did 40,000. No? So it was always back to the store and back to the door of Vips. No, so that was never a brand. Actually, we never opened since we started. We never opened a new Portón. We opened another kind of segment, Corazón de Barro and La Finca, but we never saw that brand had a growing path. So to focusing. So I think that now not having in the portfolio is a good news for us. so we can focus in the brands and in the strategy or long-term strategy that I've been talking in this table. No?
It's great. Thank you.
Thank you very much for your question. Our next question is from Mr. Fernando Herrera from Compass Group. Please go ahead.
Hi guys. First of all, congrats on the results. Just two questions. The first one is related to margins in Mexico. In EBITDA pre-IFRS, we have seen a expansion in margins, maybe due to raw materials like coffee and cheese. But I just want to understand what's going on with EBITDA post-IFRS, because we're seeing a contraction there.
Well, in EBITDA post-IFRS, we have some the increase on sales in many of our brands, but mainly in Starbucks. We have these variable rents higher than last year. So that's the main impact. If you see, we open the rents on our report, and you can see the impact of 1 point because of the variable rents that we are paying, and the variable rent we doesn't take out of the IFRS 16 expenses.
Okay, perfect. And second question, it's related to Starbucks. What are you seeing in terms of drive-through model?
But in drive-throughs, actually, like I said, most of our portfolio, there's a big amount of percentage of drive-throughs open this year. Last year
50%.
too. 50%. So that also is giving us the amount of average weekly unit sales that we have, because the average, also an investment, is bigger, but the average of that channel is around 2 times the regular stores. No, with better margins also, because we've been able to have better proposals in rents, site selection. No, those stores are mainly in highways, carreteras, and that is being very proven. We are also opening our first drive-through in France this year and in Spain this year, and we will continue with our strategy that has been very way good profitably for the brand and for Alsea. So that is going to be still a momentum to focus and a channel that we are all very interested to still develop. No.
Thanks, guys.
Thank you very much for your question. Our next question is from Mr. Felipe Casimiro from Bradesco BBI. Please go ahead.
Thank you. Buenos dias, Armando, Rafa. I'm just, I wanted to dig deeper into the competitive landscape in the fast food segment. That is one of the underperforming segments in Mexico, right? Alongside casual dining, but mostly on pizza segment. How is the competitive landscape with Little Caesars, and how are you dealing with the pressure from this more aggressive player? And if we could dig deeper also in Burger King performance in Mexico as well, that could be very helpful. Thank you.
A ver, let me tell you a little bit. What are we doing here to gain more share of wallet, no, against not only Little Caesars, against all our competitors, and how the results now? I mean, same store sales had, of course, a comparable tougher base, no, for other brands, no, especially in the rivalry that 2022 were stronger, no. However, you saw there's a same store sales growth of around 5.2% this quarter, no. That's a lot higher than the other quarters, and there we are expecting again to boost them in the upcoming quarters, no, with a different strategy that we are focused. We implement an very attractive promotion in the carry out segment. One that is been in the market probably 10 weeks now. That is Pizza Sartén for 149 pesos. And we have some other stores, like 175 stores with 129 large pizza. So now we are seeing our segment growing, like I said, 19%. So very focusing, first of all, that we are the owners, the leaders in the category, the number one in the category of delivery. But we are going against to take out also the carry out business. I think that's a very lucrative business. It's very well in margins. We don't do the delivery, that we save a lot of amount, and we can offer a very good quality product there, and differentiation of our competition. No? Our competitors, they do pizzas for carry out, but with a different kind quality and sizes. No, and we do it to order, and they do it ready to go. Those pizzas are already done. Versus the ones that we have, you order it and we do it customer way your way. No, so I think that, as you know, we are also switching to Domino's Cloud application app that will be ready hopefully in this quarter, and that will give us a high conversion rate, also in service in the counter and also in delivery. So that is a little bit the momentum that is going. We have 100 stores more than our second competitor, and we are growing a base of 50 to 80 stores this year in Mexico. The first time the franchisees open more stores than us. So that's a little bit of credibility that the brand and the momentum that we are doing that. No, regarding the Burger King, and I want to address that in the report, things are looking very well. No, and only that company, they increased their profits 3 times in the wholesale in the semester from last year. Going into the decrease in cost, almost 4 points. So that is a great momentum that the brand is doing. Also, like I told you, that kiosks, the digital kiosks that we are starting to implement, I was saying we are looking to 18% increase in ticket average, and around 22% conversion, people that goes directly to the digital kiosks. No, we are doing our program of remodel the whole portfolio. In Argentina, it's already at 70%. In Chile, it's already 89%, and we are starting to do it in Mexico with 10 stores that we're gonna remodel. So that is, I think we're living the best times for that brand, and I'm excited to report it again in this quarter better numbers for that unit.
Perfect. Thank you very much.
Thank you very much for your question. Our next question is from Mr. Bernardo Gonzalez from Sura IM. Please go ahead.
Good morning. Thank you for the space, and congratulations on the results. My first question is regarding the certificados bursátiles that are coming due in the short term. Is there any refinancing plans for them?
Yes, the next certificado bursátil that we're gonna have, it's of 1.3 billion pesos in March next year. What we are gonna work first is with the rate agencies. We think that with these numbers we can have a better rate. And yes, I think we have two opportunities to refinance this certificado bursátil. Go to the market next year, or with a bank credit also. No, in Mexico, as you know, we only have Bancomext. We don't have any other bank credit, so we have a pretty good opportunity also to have a bank credit to refinance the Cebur for next year.
Perfect. Thank you. Thank you very much. And my second question is regarding the debt covenants, specifically the interest coverage. I saw that for this quarter, it was very close to the limit of 3 times. So if you can comment on that, I don't know if, I mean, what could happen if you breach this level in the coming quarters?
Well, we don't in our projections we don't see that we can break the covenant, no? Because the increase in EBITDA and also that 66% of our credits are fixed. So even though the increase in cost of the other 30% that is variable, we don't see that we can break the covenant.
Perfect. Thank you so much.
Thank you very much for your question. As a reminder, if you have a question, please press the question button in the browser. Our next question is from Mr. Jorge Izquierdo from BTG Pactual. Please go ahead.
Good morning, Armando, Rafa, Nico. Thank you for taking my questions. The first one has to do with the impressive results we saw on your global employee turnover rate, almost 2 percentage points of rate reduction. If you could share any color on the performance by region would be very helpful. And the second one is regarding home delivery. Why is it growing so fast? What is behind these dynamics? Thank you very much and congrats on the results.
I think in that turnover, Rafa, we only are reporting Mexico in the report, but I think we can give you. I don't have exactly right now that in Mexico we did exactly second quarter 67.7% more or less, and then in the second quarter we did 64. So we are reducing the turnover by 2.5 percentage points, and in global we were in 73%, and I think we are reporting around 68%. So we did also reduction in turnover about 5.5 points, no? So I think that is globally, no? So I think also that is the important that the first question that Matsumoto just gave me around what are we doing really in there, no? And that's the 5 things, very simple but very very aligned to our strategy of being the best employer of the channel, no, reducing turnover, and so I think that is the greatest. Like somebody also asked me, the first thing we need to do is have the people and the hands in the stores as soon as to give the better service and the better and perform the traffic that we're having in stores. So that's taken care, no. Regarding home delivery, it's still strong. I mean, there's some other players. I've been having one-on-ones with our aggregators, companies, with our aligned aggregators or partnerships aggregators that we have. There is some other restaurants that are stepping down in the delivery. No, they are stepping down. They took that decision to go to delivery when this pandemic came on, and they are not doing right. So then they are not doing it for the long term. So there's, I think, some other less players still in those platforms, and we are one of those. We have, as you know, a special area department here in Alsea that just do home delivery besides the delivery that we do for Domino's. So we have people and a team just every day taking care of the platforms around the globe, seeing how can we do better and attractive promotions and products and innovation products for delivery, taking care of the packaging, taking care of the times, no, and of course how we don't have any errors in those orders, no. Most of the problems that come from that channel, or one of the first thing that the customers reclaim or is exactly, I didn't receive my product like it was, and the time, and that we are experts in that. So we are doing a very well focused in the order that is complete and in the times that has to be delivered in the time that is set. So
also that something that helped us in the quarter is that the client can pay in cash right now, not only with a credit or debit card. So that increased also sales because of this.
Great. Thank you very much.
Thank you very much for your question. As a reminder, if you have a question, please press the question button in the browser.
Ya estamos. Yo me despido. So thank you very much for
Creo que falta, creo que iba a haber una más.
There's one left, okay.
Sí, Eugenia, ¿no?
Eugenia is there, ¿no? Mario?
No. Es que puso, yo creo que dijo I have a question, pero...
Okay, let's finish with Eugenia, yeah.
Okay.
Yes, sorry.
Hello, Eugenia, can you hear us?
Y también alguien de Bancomext levantó la mano.
Hi, can you hear me?
Yes.
Yes, we can hear you.
Perfect. Thank you very much for taking the question. Actually, what I wanted to understand a bit more is if you have any changes for the cash flow walk that you gave us during the Investor Day, or anything regarding the share buyback plan that you have. So just trying to understand how the free cash flow should shape through year end. Thank you.
No, really, in terms of the free cash flow for the whole year, we maintain our budget to have a positive free cash flow of around 200 million pesos. As I mentioned, with a capex of 5.5 billion and an EBITDA of higher than 13%, we mentioned that the EBITDA can be around 10 billion pesos. It can be a little bit better because of the performance that we have this is the first semester, but free cash flow will be positive for the full year.
Thank you, Rafa. And do you still expect to go with the share buyback plan that you had? If I'm not mistaken, it was 500 million pesos.
You know, in terms of the buyback shares, we already did that. The amount that we already can sell. If you remember, this year we bought back 4.9 billion pesos, and we already canceled that. For this year, it was it. And for the next year, we'll see what we're going to do in terms of dividend or something like that.
Okay, perfect. Thank you.
Thank you very much for your question. Our next question is from Mr. Armando Ciordia from Banco Mext. Please go ahead.
Yeah, thank you, Armando and Rafa. Thank you very much. My question is, based on the good results reported up to the second quarter 2023, do you expect any upgrade in the ratings aside from Fitch and HA ratings?
Yes, as I mentioned, we're going to start with the result of the second quarter. Yes, we expect a better rate with both of them, no? Because one of the main concerns it was the leverage ratio that we have, no? As you saw, net debt EBITDA per IFRS 16 was 2.2 times right now, so it's a pretty good number, no? Better than the projection that we had 2 years ago.
That's good news. Thank you. Thank you very much.
Thank you. ¿Cuándo es la calificación?
Thank you very much for your question. That was the last question. This concludes the Q&A session for today.
Ya empecé.
I will now hand over to Mr. Armando Torrado for final comments. Please go ahead.
Thank you very much for attending our quarterly video conference. Thanks for the questions, the Q&A. And if you have any further questions like anywhere else, please be in touch with our investor relation team. And thanks for today, and we hope to see you in October. And have a great day. Thank you.
Alsea would like to thank you for participating in today's video conference. You may now disconnect.